likely is a recession in 2020? That's the question of the hour. It's on everybody's mind. Hi, I'm Cheryl Baxter with Market Direct Realty, and we need to remember that next year is a presidential election year and probably one of the most controversial elections yet. There is going to be a lot of questioning and political debates about the economy. Why is it so good? And questioning if the economy will decline. So this can stir up a lot of hype. There have been 4 major surveys this year asking experts if they believe that we will see a recession in this year. And 67% of them do believe that we will see a recession by 2020. Pulse Economics surveyed analysts, and 59% believe that we will see a recession by 2020. Why do you think that is? We've been in the longest recovery period in American history, so we should expect to see a slowdown. The GDP will slow down, but let's look up the Webster's Dictionary's definition of recession. It's a temporary economic decline during which trade and industrial activity are reduced, generally identified in a fall in the GDP, gross domestic product, in 2 successive quarters. So we need to remember that recession does not mean housing crisis. In 3 of the 5 recessions, housing prices actually increased during the recession. Obviously, 2008 was the most drastic. Now, on the same survey from Pulse Economics that asked if they anticipated a recession, they also asked in the same day at the same time, the exact same survey, same analyst, they were asked what would trigger the recession. Number 1 was trade policy, number 2 was stock market conditions, and number 3 was a geological crisis. Number 9 on their list of triggers was housing slowdown. In 2008, our largest decline in appreciation was because of the housing slowdown and the situation with the mortgage industry. This year, we're not even in the top 8. Also, in the same survey, they asked, what about the median appreciation of housing? All the analysts said that the housing prices are going to go up, not down. Appreciation is going to slow down, but the prices are still going up everywhere from 2.5% to 4.1% through 2023. Why is this important to know? Well, we don't want to get in a panic about buying and selling and become afraid it will be like 2008. In fact, Morgan Housel, a well-renowned financial analyst, said an interesting thing is that the widespread assumption that the next recession will be as bad as 2008, natural to think that way, but statistically highly unlikely. It could be over before we even realize it began. So that's what he thinks. Prices and appreciation are just expected to be more normalized. So don't let all the hype scare you from your dream and benefits of home ownership. In my opinion, it's one of the very best investments that you can make. According to Mark Fleming, First American's chief economist, he says if the 30-year fixed rate mortgage declines just a fraction more, consumer house buying power would reach its highest level in almost 20 years. So what does that tell us? It tells us not to be so caught up in the hype. Make the move. And as always, if you have any questions at all, please feel free to reach out to me, Cheryl Baxter, Market Direct Realty. I'm always happy to help.